Hello traders, today is Saturday and this is the video. It's a recap video for DAX for Friday, February the 15th, and I will start this video with the first tweet before the publishing of both morning notes and chart with zones. And this is this was weekly chart of DAX. To clarify this bias on large time frames, and bias on smaller time frames, when those biases are aligned, then we can get a bigger move. What that means, and later we are going to look at these charts how they are looking now. So bias on bigger time frames. Let's see this move here. When they this is weekly DAX. So when they made a move above, you can see that there was a support, I'm sorry, there was a resistance, and when they broke that resistance, and right about here, so whole week is closed above resistance, and your bias, obviously large time frame bias, is bullish because you clearly have a bullish trend to the upside, and now you get the breakout, and now your short-term time bias is also bullish because here in these moves, this is weekly chart, so this is 1, 2, 3, 4, 5, like 5 weeks to the downside. It doesn't pay here for you to be bullish. If you are a day trader or a swing trader, there's a lot of points here, although it is looking small, but this is weekly chart, so there's a lot of points here. But here, after this candle, bias is clear that higher time frame bias, which is bullish, obviously, and now shorter time frame bias is also bullish, and those biases are aligned, and that means you are going to press for the longs. You're going to buy every pullback, and now the decision is easier here because you have a push to the upside. And the same goes when the market goes to the downside, and when the biases are aligned. Let's say daily bias with your intraday bias, it is aligned. And also this was the situation here. Market is below this trend line that is from 2011, and just made here a back test of that broken support trend line, and here it is. They were testing for many weeks, and we had some kind of price rejection from it, but that changed later. And this was the chart that was posted before the open, a zone chart, along with other charts. And there was this chart also on 240 minutes, and there was additional chart of the S&P. And this here, this situation here, that it could be a false breakout above the 200 moving average on the S&P, and the fact that between these highs you could see a bearish divergence on 240 minute chart, let me to think that there could be a chance for a breakdown, and that this situation that we have here, this hugging of this zone and dancing here near it, could mean that they are going to break it. And as always, how can you know? I said in the morning notes, today there could be a better moves. Better moves always is an option when you have a market that is hanging near large time frame inflection points. Like this. This was on Thursday, school book trade. Market that just touched larger time frame zone and collapse. And we had a good move after. And for Friday, situation was similar. Again, market is here, near the inflection point. And in the morning notes, this is the way I used this sign as to really, to warn you that there could be some better movement. And I said that S&P as a stronger index, if it's going to go down as a stronger index, which made this kind of move, then it would collapse DAX. But nothing of that happened really, and S&P now looking like this. So what you have in the morning can be very deceiving, and the S&P from the morning, basically from the morning, they just made a small spring under the yesterday low. Yesterday low, of course, means Thursday low. This is Friday, and basically before the even before the EU Open started, before DAX Open, they started their move slowly to the upside, and then they were going together to the upside. And also this movement here we could use as a correlation for DAX, for our decisions, and what could we expect out of DAX. Because in the first let's say 30-45 minutes, this situation here wasn't really so clear. As I said before, when market pierced a zone for just 10 to 20 points and then go back inside, that could very well be a false breakdown in this case. And this scenario was told about, I was talking about this scenario right after they made this breakout, that move to this zone could be our long opportunity, and not to be surprised if they are going to touch this gap and fill it. And now on the look how the DAX index chart looks. This is daily index chart, meaning every candle is just RTH session, and you can clearly see that Friday is engulfing, bullish engulfing candle. It is engulfing this big drop from Thursday. It is completely Thursday now, it's completely invalidated, and this is a bullish sign. And also on the 4-hour chart, I didn't even notice that this is the place of this gap here that was filled at basically at 9:10. And one of my followers, Jose from Spain, told me that this is also the 61.8 fib of this move. I didn't even notice that. And you know, when market is dancing here and you are on a 5-minute chart, I also replied for that question, and a few people asked me what kind of time frames I'm using in trading. And I'm using this 5-minute chart to show you the opportunities in the video, but that doesn't mean that I'm trading only on the 5-minute chart, or that I'm using only 5-minute chart. I simultaneously watch DAX on 3 different time frames, which I all consider small time frames, and those are usually 5, 15 and 30 minutes, or there could be some difference like 5, 15 or 60, or when the market is exceptionally choppy, to discount for that choppiness, I will switch to 15, 30, 60. And of course I'm aware of what is happening at the 240 daily, weekly, which I will look at before the open. So before the open, in the preparation, you are prepared, and during the session you can look only on this smaller, and occasionally take a look to the, let's say, 4-hour and the daily chart. And you know, when you see this, because during the trading many traders were here, to tell you the truth, and I showed you that trade on Twitter, I even tried here a short after this first move, thinking that if with the half position, and I showed you that on Twitter, if there is going to be a breakdown, I was expecting, if there going to be a breakdown, it could be a really good one with 200 plus points, and if it turns out to be a false breakdown and market move to the upside, I didn't really expect it to go this high. My idea was that they're going to make just like this, because as you see, when they made this breakout, they were here in the middle. They stopped in the middle of the range, and the next day they were dancing inside the middle of the range all day, and then on the third day, so it took 3 days to go from here to here, then 1 day to negate this move, then again this to negate this move, and as you can see, these moves are getting stronger. So this move is a really relaxing move to here, then they made this, and half of this is in the Friday's pre-market, then Friday was just a zoom. To tell you the truth, I didn't expect that, and when it was crystal clear and I got a break-even trade here on a short, that these odds are turning, and then you look on the S&P and ask yourself, 930 S&P is here. What that could mean? That could mean only that all of these people, they're pushing and pushing and pushing price to the downside, and they are not able to push below the previous day's low, and that is a very serious threat for them. They are cornered basically. Nobody is going to sell here, and then they are forced to close, and that is how you get those swift rallies. Basically, that's a short covering rally. You are putting fuel on fire, because every buyer is going to see that it is a false breakout and buyers jumping in, and the price is going above, and then those people, especially those with bad locations, are forced to close. And the exact same thing happened on DAX also. If we are going to turn at the session breaks to see, this is very useful also. How can you see inventory? Very easy, because this here was previous cash close, and pre-market high was also there. And if you drew just like this one rectangle, so this is the start of the pre-market session, and they got here basically at the open. They were around here. So all of this, when market goes above the zone that was clearly labeled that the weak market would be below, meaning above it is not so weak. And all of this now, everybody here who's holding short and who's holding a short from the previous day is wrong, and all of them should close. And the target, first target, if the move is not so good, is this, double the range. But we can see now that range wasn't really doubled, it was like quadrupled. So you can't know that in advance that this is going to be the move, but once you observe this and find out that they're not going down, and in fact they're here just to fill this gap and nothing else, here is your entry point around here for long, like this. Now we are here, we are certain that this is a false breakdown. First target is this, of course, and then second target, and you can use these zones. And after this move, when they are stuck into the previous cash close and doing this, you really don't want to fade it. You don't want to fade it at all. You want here just to observe what are they going to do, and after that, when they pushed after 11 o'clock hard to the upside, you got nothing here to fade. If you're not in this move, if you're not long, that doesn't mean that you should be short. You can use ATR to judge where is the chance that this could be an exhaustion move. Now, I have shown you, I wasn't really satisfied with how I played personally this day, because this was a huge move. I took only 30 points on the long and 20-25 here on short, so basically like 50 points, and this was a move like 250 points. So I wasn't really satisfied by that, but this can happen. This can happen, and this here, if you could see this move, it looked like this at the time, parabolic, and you could say that, okay, from here to here, almost all ATR, almost entire daily range. So this is the place for a pullback, and it was a place for a pullback, but now in hindsight we could say much better decision would be for a buyer, because you can see this move has had no pullback whatsoever. And if you are going to follow that and make a fib, then 38.2 is here. That could be a logical pullback. But when you see that the pullbacks are really shallow, that means only one thing. It is a trend up day. And by this time it was very clear. I took just this from here to here, like this, and then I missed the long. And after this movement, about here I would really stopped trading, but if I would to trade, later I would be here and I would lose on this short from here, because this is the zone, good zone, and tested today first time. It was tested the previous day, but you could also from here to here really expect some kind of reaction, but this time it didn't happen. But you should really trust your long-term expectancy. As I said before, expectancy is very, very important, and traders are stuck in one trap. They want to judge which setup is going to fail and which setup is going to be good. You have to try on the larger time frame zones, and many times it will be a good trade. Not this time. So this here was a fail for everybody that took that. So in hindsight we could say, okay, because this was a very, very shallow pullback, and you have to be prepared for that. If you're not in here in this long, you have to be prepared to step up and buy that. And now the question is, where is your stop going to be if you're buying this? And let us draw that fib again, and fib 48.2 is here. So if your stop is like on every time we are fading the zone or taking like this continuation type trade, if you are here for longer, stop is behind the zone. So now you have to be ready, if the pullback is bigger and you are stopped, to get here again on a long. Now looking for the price to go at least to this stop, because it's time you don't know, is it going to go higher or not. But once they broke this high, now this is clear that if they are breaking this, then nothing is going to stop them to go at least to here. And basically what they did fill to the point this gap from February 11 and this one from February 6th. Also take note that there is a holiday on Monday, George Washington Day in USA, so liquidity is probably going to be lower. And just to clarify additionally this here, because how we can see obviously it was a false breakdown. And when you look at, as many times, don't get married just to the one time frame. You see how this is looking on a 5-minute chart, pretty indecisive. That is why you should look it on many time frames, because at that time this same picture on a 30-minute chart was looking like this. See how the big difference is. Here it is the same thing, but this is 30-minute chart, and on this chart you have just a spike below the zone and below the pre-market low. Pre-market low was here. I deleted on this chart. So that was our opportunities. When we are understand that this is a false breakdown, now we are along here with our stop below this gap, because as I said on Twitter, bulls need price above this gap, bears needs below. So if there would be a breakdown and we are stopped, we are going with it. But breakdowns usually don't happen like that. They're going to diddle here half a day and then to make a breakdown. If they're close to the zone, there could be just like this to the downside. We didn't get that, so now we are going to go to the long side. These were very deceiving here. And also, if you are going to watch the headlines, every singer's headline before the open was Europe was seen opening lower. And what that means to you? Absolutely nothing. They didn't get it this time. Maybe they are going to get the right direction next time. But this here, Is you're in for more pain? What that do to you? Any good? No. It is just background noise. We should be aware of the news. We should be aware that somewhere in the background somebody is talking. You know, US-China trade talks and so on. But this is the most important thing. This here. You know, if you're going to trade using technical analysis, then this is our field. This is what are we going to look. These smaller time frames, bigger time frames, 240, daily, weekly, cash. And what I have noticed also on Twitter, if I'm going to publish charts like this, then if there are two attachments like this, then you can't save as, and you cannot save that as a picture. You can save it as a picture only if there is just one like this, and you can say copy image or save image as. So, and also for the morning notes I was forced to do it like this, like a picture, so you can from Twitter, let's say, print it and nothing else. This is going to be moved to the site. I already showed you that on Twitter. Tell me what you think about it. This is going to be here on test page, and on Monday these are going to be like this. Morning notes are going to be a PDF file. It's much better than the picture, and I'm forced also to put charts into the PDF file because I cannot put link to the picture here. I cannot go with zip or RAR, so it is going to be like PDF for both, and it is okay. And archive is going to be lower, just like two lines with links, so you can always go back and to see what chart was from each day in the past. And that was it for this edition of DAX recap video. I wish you good weekend. I wish you good trading for Monday. I'm sorry this video is a bit longer, but many subjects were covered in this one.